Monday morning, welcome back to Squawk Box Asia Side. UAE fund RAK Minerals and Metals looks to be ramping up its investment drive out here in Asia. It recently launched a fund aimed at developing the region's transport and energy infrastructure sectors. Meantime, in Indonesia, the world's largest exporter of thermal coal, RMMI, is starting construction on its railway and coal jetty projects. For more, Madhu Koneru is Managing Director at RAK Minerals and Metals Investments. He joins us live here on set at our Asia headquarters. Madhu, great to see you. It's been a couple of months. Last time we talked was down in Jakarta, and at that stage you only had an MOU, but now this is happening. It's real.
Yes. After we met last time, we had an MOU with the Indonesian government. We've converted the MOU into an agreement where we have sat down with the East Kalimantan government and said, what do we give to the country and what do we get against that?
Right.
And
so this is the production sharing part, so to speak.
Yes, it's a socio-economic development agreement. That's what the state government wanted, for us to develop the infrastructure and other related activities. That's what we have committed for $1 billion, and that 50 to 60% is going towards the railway track. That becomes the main investment in the overall scheme of things in the state development. And we as a company will get access to coal mines and transporting coal out of that.
Right.
So it's a win-win situation for the East Kutai government as well as for Ras Al Khaimah government for us to take this forward.
Excellent.
Madhu, big picture question for you. Where are we right now, and where do you think we're going in the broader commodities market when you look at pricing? Because a lot of people are saying that last week's decision by the Fed to go further down the road of quantitative easing is really going to be a game-changing event for the commodities market. You've got expectations of dollar debasement, and that's going to play onto commodities in the upside. Do you think that this is really going to create an inflection point where commodities could rally?
If you look at the situation right now with regard to the commodity prices, if you take the last 20-year average, the commodity prices are still high. So companies like us, which have been in business, Ras Al Khaimah has been in the mining business for the last 40 years. They've been mining limestone and other commodities in other parts of the world. So for companies like us, where we invest in greenfield, in innovative projects, infrastructure-related projects, we still have the right business model, what I like to say, in the financial side. And with regard to the way things are going forward,
what is the demand there?
I think the demand is still there. There is a very slow demand which is there compared to what people were expecting, not what is happening. People were expecting a huge demand, but there is a very slow demand because there is a certain minimum infrastructure required in this part of the world. In Asia Pacific region, there's a lot of infrastructure required, and we are focused in infrastructure products, so we are in coal and copper. There are a lot of other mining companies and commodity players who have spread themselves very thin and getting into gold, copper, coal, Those are the companies again getting affected in one of the commodities, and it's affecting the overall business. But we've been very focused in coal and copper, and companies which have been focusing on the fundamentals, making sure that when they invest, they take long-term pricing into effect, and their business model is surrounded around long-term pricing. Things are pretty much fine.
Madhu, it's Karen Cho hopping to the conversation here. I want to know your view around iron ore pricing, because we are getting closer to the finalisation of negotiating prices, and Citigroup today is suggesting that prices have started to stabilise, so that means we could be looking at a drop in prices of about 35% this year. Is that close to the targets that you're looking at right now?
We don't deal in iron ore, but at the same time I can mention to you that 10 years back, iron ore was sold at, like in India, $20 FOB, and today's price is $65 FOB within India, and 2 years back it was $165. So guys who have got into business last 3 years, for them the iron ore price has crashed, but for people like us, it's still high.
Madhu, when you look at valuations across the industry, surely there must be a number of very compelling assets out there because of the depressed state of prices in the broader market. No doubt that's going to be a big theme at the Asia Mining Conference this week. Do you see any opportunities in the industry, in the broader market right now, given the fact that we've seen this collapse in prices?
True. We are seeing a mixed basket of companies which are available in the capital markets today. Some of them where the fundamentals are not right and they're going bust. There are companies where the fundamentals are right, but the owners have leveraged their the valuations and other investments. There are companies which are fundamentals are right, the owners are, the basics are right. At the same time, they're not able to get the business to grow in the speed which they wanted to grow. We are being very particular about making sure whichever resource we look at, we are looking at, it's a question of making money. So we are looking at deals, but at the same time, we are making sure that the fundamentals of the mine and the operations are very, very strong, not what the valuations are showing in the stock exchange. Stock exchange is just a vehicle we use to buy and sell shares, but the fundamentals of the operation have to be very, very place to make sure that you don't buy an iron ore mine with today's pricing, because you can expect it to go down by 30%, 40% next year or 5 years down the line, because we have seen 10 years back iron ore price at $20. So even if today you're trying to buy an iron ore mine where the costing is coming to 60 and you're going to sell at 65 and you only make $5 a ton, it's not worth looking at a project like that. The fundamentals of the project have to be very strong. An example is why we are building a railway track, because we don't think that the coal will always remain high. The prices may soften. When the prices go down, you're going to start going down and saying, how do we cut our costs? And the first thing you're going to look at is your transportation. And that's the reason why we're putting a railway track, so that you do large volumes, lower cost of transportation. Transportation by road compared to railway track, I'll give you a comparison. If the 120 kilometers we are building the railway track, typically road in Indonesia will cost anywhere between $15 to $16. By railway track, it's going to cost us $5. So if the prices soften tomorrow, we're not going to shut down our operation. We're going to continue to do operation, because our pricing and costing of our investment is done very, very conservative. And if there are companies which have got similar kind of a thought process, but having issues with regard to their owners being leveraged somewhere else, we would like to take over these kind of operations, and we are seriously looking at some of them.
Okay, interesting stuff. Madhu, great to talk to you, sir. Thanks for coming on this morning. We've been talking to Madhu Koneru there from RAK Minerals and Metals Investment.